From April 2017, there is a dramatic change in the flat rate VAT scheme. It was created because it's supposed to be simple for people to use. You look at your total turnover and then you multiply by a flat rate percentage, and that's what you hand over to the government. So you then get to keep the percentage difference between 20% you've charged your customer and your flat rate scheme. But that's changed because so many people abuse the system. They registered for VAT when they didn't need to be, and they're able to pocket the difference. So now, the government have come up with something called a limited cost trader. So if you are what they call a limited cost trader, your new flat rate scheme is 16.5%. And that means there's virtually no benefit to being on the flat rate scheme. But what is a limited cost trader? This is when you have purchased relevant goods that are below £1,000 or below 2% of your turnover, and that is per year. It's looked at by VAT period. So if you're doing a quarterly VAT period of April, May, June, if you buy relevant goods of less than £250, you are a limited cost trader. But what are these relevant goods? Well, it's easier to say what they're not. They're not supply of services, e.g. your accountant's fee, solicitor, your business coach, printing, advertising, downloadable documents and things like that. No food or subsistence claims, no hotels, no fuel for your vehicle, unless of course you're something like a taxi driver or a driving instructor. No capital costs like printers, laptops, mobile phones. No maintenance on your instruments. So if you're going to get them re-lacquered, that is not a cost of good. So looking at that, what are relevant goods? Well, these are goods you purchase for you to use in your business. So it's going to be things like stationery and other similar supplies. Software purchased on a physical disc, not downloaded. Books you go and physically buy, again, not e-books. Music you go and physically buy, not from musicroom.com and things like that. Cleaning materials used exclusively in your business. New pads for your instruments, those type of things. Or even materials you have purchased and you use at your client. Say you're a training provider and you get things printed or you purchase in books, they are able to be relevant goods. Now, you may be a limited cost trader for one period, but a normal trader for the next period. So you can be operating the 16.5% new VAT rate, or say 14.5% under your normal flat rate scheme. However, the complication comes at the beginning of the scheme if your VAT period is split. A couple of periods before the change and then a period after effectively means you need to run 2 VAT returns and then add the 2 together. Given this is now not a very viable aspect for finance, you might want to consider deregistering for VAT if you're nowhere near the VAT threshold, or potentially looking at the full version of VAT. That way you'll be able to reclaim your import VAT. So that's it. From April the 1st, the joy of being on flat rate scheme and any benefits you get technically have disappeared if you are a limited cost trader. Any problems, please give me a bell or talk to your accountant. Thank you.